Ajay, thank you so much for joining me.
Pleasure.
So, digital fraud is a big thing in India now. There are two levels, and maybe we can talk about both. One is the enterprise level, what companies face and what they're doing to protect themselves, and the other is consumers, and we hear more of that, including going on to online internet scams, digital arrests, and what have you. So, where do you come in, and what are you doing to help solve this problem?
So AuthBridge comes as a technology service provider to the financial institutions in the financial world to see how we could sit between them and the data layers and help them take decisions using consuming data that's coming to them from multiple sources, whether their own data sets, it's external data providers, it's government bureaus, or it's pure data which is lying all over the net. And if that can be mined intelligently and be put to use. So that's where we come in. We specialize in the business of aggregating data, putting intelligence to it, and making it more decipherable and consumable directly for decisions.
And when you say data, can you define the scope of the data that you're collecting in terms of people, data points?
So see, so what's happened is in the last 6 to 7 years with the banking and financial services sits at a very interesting crossroad. You have money, you have identity, and you have digital access now. With the advent, post-COVID, UPI, and the entire mobile banking, more and more data is now becoming digital. Banks also want to grow faster because they know the digital routes are faster. The new generation, the younger generation is actually more digital savvy. So that's putting more and more data on the digital web. Now, when that happens, the ability for the fraudsters to connect with you and kind of defraud has increased multifold. I remember days when my dad would bank only by going to a branch. He still does that, right? He goes to a bank branch physically and he has to present his check himself. So he enjoys doing it that way. But that's not the generation next, right? And that's where the frauds are opening up. All kinds of things happening, and that's where we try to come in and depending on what the bank wants to do, what problem they want us to solve, we kind of try.
So let me ask you a 30,000 feet question first. Sure. So why do you think the system has not been able to, let's say, control or slow down the incidence of fraud of the nature that we're talking about, digital fraud in the context of BFSI?
One, the post-COVID digitization was sudden. I think the UPI adoption has been at a mind-blowing rate. Practically everybody and anybody in the country today uses a smartphone and has access to UPI. So both of those things and the literacy rate in certain pockets of the country, these three things are a deadly combination, which kind of opens it for fraud. The regulators and various institutions working on it have been constantly evolving. Now I remember early days of COVID, RBI came out saying video KYC. If you're not going to be meeting your customers personally, RBI notified video KYC, and a lot of organizations like us came out with video KYC solutions. RBI said, okay, you can't use artificial intelligence on video KYC. You still have to have your agent on the other side while the customer is doing video. So that was a great move at just the right time. But then you also know that the moment you're looking at somebody on a video, then some bloke on the other side decided to generate deepfake videos, right? Now, how do you catch deepfake? So your fraudsters are constantly inventing ways and means of working around the layers that are being put to either facilitate a digital adoption or a layer to prevent any kind of fraud, and they're kind of working around. So it's a constant cat and mouse chase between regulators, technology service providers, and fraudsters. We hear about digital arrests. We hear a lot about how synthetic identities are being used to commit frauds. Now, till a few years back, nobody in the banking environment even knew the word synthetic IDs, right? Now it's a commonly used term. You would have read a lot about mule accounts, right? We didn't even know of mule accounts. And then some fraudster figured out a way to kind of move money around by creating fake bank accounts or creating bank accounts of people, unsuspecting people, and then moving money around through that. So then the regulators are now figuring out how do you catch that. And that's all device fingerprinting, that's all behavioral patterns of customers, et cetera, et cetera. So the whole science of fraud, of preventing fraud, unfortunately, always goes one step behind the fraudsters. In some cases, we would be a few steps ahead, figure out, think like them, see what else can happen, we create a solution around it. But in quite a few cases, we also are behind them.
Right. So, which is also suggesting to me that the traditional method of KYC or know your customer and the whole process that goes into opening a bank account is flawed, fundamentally at least. It works for many people, but for those who want to game it, they are obviously gaming it. So, in which case, where or which aspect of that chain does the solution lie as we go ahead? Because you can't keep asking me to give more and more data and more information and my home address and my rent agreement and share house purchase agreement and so on, because it's only, I mean, pointing back all to the same, to the same person, so to speak.
Yeah. So, see, the reason why financial institutions ask you for so much data is they were trying to catch if they're not sure about anything in the initial part of the screening or the diligence process. Now, that's where digital solutions and digital layers come in, and which are much faster. Now, at AuthBridge, for example, we would integrate some 160, 170 parallel data points, including a lot of surrogate data points, which could help you quickly take a decision on whether this person is credit worthy or not, or should be given an insurance or not. For example, over a video call, you could detect very subtly whether this is a living individual or a deepfake. You can detect deepfake videos today with a fairly high degree of accuracy, but that's also evolving. Now, that cannot be done in a normal, conventional way, so the solutions are evolving. There are ways to identify synthetic IDs now. There's a lot of work happening on mule accounts, but that's also evolving with more intelligence being built on, digital fingerprinting, device fingerprinting, etc. So this is a constantly evolving, and there are some solutions around it.
Right. So you as a company started out, let's say, verifying individuals for jobs that they were applying to, and I'm assuming this was at scale, and you continue to do that. That's your foundation to, let's say, go into the digital side of things and going into the banking and financial system. So tell us about, so at the heart of everything is the person, and the person is either a crook or a saint, as it happens. So tell us about how that is helping you, if so, in solving the problem that we are facing today.
So we, almost like 20 years of intelligence on individual data and how to detect different antecedents, and that's actually been pretty handy as we built surrogate data layers with banks and financial institutions to help them detect all kinds of current or future frauds. One of the biggest areas that we kind of solved for financial institutions was aggregation of criminal and litigation data. Now, what happens here is banks traditionally have been used to looking at, credit report failures, right? So I haven't paid my previous loan on time, or I've had a few check bounces while paying my credit report, while paying my credit card. So that would generate a red flag. But I may have borrowed from a private lender and not returned it, he would have filed a section 138, which is a check bouncing case against me, but that you would not know because it will never appear in my credit report. So where AuthBridge comes in is it looks at you as an individual from all aspects. We look at your identity, which is, thanks to Aadhaar today, is a fairly simple process. But then we have to marry that identity with at least one more data point of identity to make sure that, that one identity wasn't used and the other identities are also matching. That is married with the bureau data, and that matches. Then we look at all the data available about you in the public domain, including litigation and crime data, to see if there is anything there that would impact the bank and your ability to serve the loan properly later, etc., etc. So that's where we come in. And that product originally was designed. That product's called Vault. It was originally designed to solve for the gig economy in India. So we are the largest player in the gig workforce screening space. Screen close to about 100,000 people every day as they get onboarded across multiple screening platforms, and they want to know identity.
You say 100,000 people every day get screened? Yes. So every day there are 100,000 new people, or there are people who are coming back and rotating in the system?
Yeah, so people moving from one platform to another, people at writing moving into other jobs, fresh people coming in. So it's about 100,000 new enrollments on various gig platforms across the country, and they need to be taken through an identity check process, even driving licenses wherever driving licenses matter, or criminal records for sure. Right? So that intelligence and that capability was built to solve that problem, and today we use it at massive scale with financial institutions to help them, weed out people with all kinds of negative
Right.
history.
So you're working with banks, non-bank finance companies, and other financial services players to act as a layer between the customer and them, and providing them this data. So one is what is the size of this operation? I mean, how many people's accounts are you actually physically maintaining, and how often are you updating? I mean, that's so that the bank knows if there's something else apart from the usual check not clearing on the second of whatever the month happening.
So in a typical month, we would be looking at close to about 20 million data points, 15 to 20 million data points, depending on which month is it. It's a festival season, then the number of data points we hit is much higher.
That'll correlate to how many people are individuals?
Typically about 5 million.
Okay.
And for many of these cases, we keep a check on an ongoing basis. So whether it is an individual who's taken a loan, or it's a business that's taken a kind of working capital loan or any kind of another business loan, we would keep a watch on the profile of the customer, whether it is ongoing income, it is various other surrogate data points. For example, for business, we would look at their compliances to GST, their compliance to paying their employee PF, depositing PF on time, filing their GST and PF returns. Because usually what we have seen is when businesses go into trouble, that's the first thing where they start default, right? PF delays, GST delays, and then they go into loans not being paid on time. So that's an early catch. The other area to look at usually for us is number of employee count. So is that count going down? Something as silly as looking at your electricity bill, right? If it's a season where your electricity bill is normally higher than the previous months, why is it going down this month? So
and how do you access that?
So it's all available. It's public data. So at the point of onboarding the customer, we ask for details that we can then eventually use
on behalf of the bank. Or the bank asks on your behalf. How does it work?
No, so the bank asks for that information, and some of that information is passed to us as per whatever is allowed as per law, and that information is what we keep a watch on. So if there's an electricity meter, for example, we know there is a meter number, and that meter number is a unique identifier. We keep a watch on that meter number to see if there's a pattern. And if the pattern is off the ordinary, we would highlight it back to the bank and they'll consume it. There's another data point so we will not know which individual is it, right? But we will know that, okay, there is a data point on salary. There's a data point on GST. So we are analyzing it, and if there is a variation which is off the ordinary grid, we'll highlight it back to the bank.
And so does that mean that whether it's you or others are tracking all, let's say, home loan borrowers in this country or MSME loan borrowers in this country?
My guess is some of the larger banks do it themselves. Quite a few of them do it themselves, but they're also at the back. Some of data provision is provided, is kind of given by us or companies like us. A lot of mid-sized banks, financial institutions who are deploying their own tech bandwidth to actually solve the customer-facing problems, rely on people like us to solve the entire fraud and fraud-related challenges, because
or potential fraud, or potential default.
Absolutely. So that's what we do for a living, right? So we are constantly thinking pretty much the way fraudsters think. We have a solutioning team which is constantly looking at what else can happen, where else can somebody blow a hole in the whole, kind of story. And if we can plug that and go back to the bank and, or a financial institution and tell them that, there's a possibility of an issue happening here, or we are seeing a pattern of some other form. For example, we notice a university in an education check that there's a pattern that there is a certain university or certain block of universities where we are seeing a lot of discrepancies emerging. So we'll inform the banks and a lot of our customers, telling them that if you're getting an education loan request for students from, this particular institute, just be careful, right? Or if there are certain PIN codes in India where we are finding a certain kind of fraud, we would highlight it to our ecosystem, telling them that, this PIN code, be a little careful.
Right. But in terms of, let's say you said 5 million, give or take, individual accounts, how many of them would be, let's say, either borderline or going into some kind of default or poised for default at any point of time?
Hard to put a number to it, but I think varies a lot from bank to bank. See, our job ends actually, Govind, at providing them with the right data. They have their own underwriting layers at any point in time.
They may ignore it also.
So a lot of time they do, to their peril, unfortunately, many times, but sometimes it works also, because bank's okay to know what the bank decides with the data we give to them is entirely their call. Hard to kind of point a finger, but there are banks we've seen, there are institutions, not banks, there are financial institutions, particularly NBFCs we've seen, who are callous about compliances and not looking at surrogate data, and have seen NPAs as high as 12%, 10 to 12%, which is like really, really bad. And then there are financial institutions doing very well even without looking at too much of data, just because they're very careful about selection of the right, they're very careful at the onboarding stage itself. So they have NPAs of as low as 1% or 1.5%, which is fairly industry standard.
Right. So it's good to know that, if I were to be a loan taker as a company or as an individual, that I'm being tracked on many more parameters than I might know or think. So now all of these 5 million, to use your same sample set, are mostly the good guys, I think, because their businesses may go down, things may happen. I mean, it may not be fully, let's say, advertent if something were to go wrong. The bigger problem we seem to be dealing with is the people who fall outside this, who don't care one way or the other, and whose intention to start is to defraud or to pull something. So how are you looking at that?
So see, so first-time criminal is impossible to catch. Right? So we've seen people with everything good, but this guy just suddenly decides to do something silly, can't do anything about it. But then you look at patterns. So for example, I said device fingerprinting. Now we've seen from the same mobile phone, you may have 20 applications being filed. Suddenly, you see 20 loan applications being filed in 20 different IP addresses through the same device. Now that's alert. In the earlier days, we used to track mobile numbers. We used to say, okay, this mobile number has been used to file these 20 applications, there's an issue. Today, people have gone beyond it. So they get 50 SIM cards, and you have 50 applications going with 50 different numbers, but from one device. So we are going backwards in figuring out frauds. But yeah, there are, first-time criminals we can't catch. Banks and financial institutions still don't openly share data. Partly it's also because it's regulated data, so they can't. And there's no central pool other than the bureaus. But sometimes bureaus are, it's too late by the time data goes into a bureau. For example, I may be applying for a loan in 6 banks at the same time. Right? Based on my credit history till last quarter, they may all find me very good. Now I've taken 6 loans and I've run away with them. Right? But by the time the banks will reach out to the bureau, it will be end of this quarter. They're reporting it on a monthly or quarterly basis. So other banks will get to know only about me as a fraudster in another 1.5 months.
But this is more traditional fraud, isn't it? I mean, as opposed to, let's say, the digital fraud that we now are exposed to, which, can crop up in someone's life or on their laptops.
See, catching of a fraud, as I explained, will always be a lagged process, right? So, but a lot of that intelligence we used to see what we can catch at the beginning. That's what. So device fingerprinting comes there. So we are keeping a track of IP addresses of devices. We're keeping a track of IP addresses from where mobile applications are being accessed, and using it right at the point of filing the application itself. So it's like a instant hit for the bank that, okay, these 100,000 applications that have come today, has any one of these applications come from more than 10 similar IP addresses or 3 similar devices, etc., etc. Then there's a blacklist of devices they have, there are IP addresses they have, and some of those we maintain at our end because we continue to collate that intelligence at our end, and we give that intelligence back to financial institutions as a kind of data hit, which they can consume. So a lot of these frauds have been caught over a period of time now with proactive measures right at the onboarding stage. So RBI's solution of Mule Hunter, which is Mule Hunter, it's an AI solution that the regulators built, is also a proactive, is a reactive solution, unfortunately, to the Mule account problems we all kind of kept hearing about. But now that it's there, it'll obviously safeguard future Mule accounts, future that channel being used for money laundering and so on and so forth.
Right. So last question. So if I were to ask you in general, as the system gets more sophisticated about tracking people who are, let's say, loan takers, as well as those who are out to with an intent to defraud the system or to actually commit the equivalent of a highway robbery, but digitally. What do we need to be thinking of? I mean, if you were to, this is more of a crystal ball question. I mean, how do we stay ahead of these guys who, of course, many of them are not even in India. They could be in Cambodia or somewhere else.
Yeah. So I think the new Data Protection Act, which has just come out recently, once it's notified properly, there is a provision to create a consent manager layer, right? Which is almost similar to what government has already notified as account aggregation for the financial institutions. Now, once that's properly notified, it allows a much larger ecosystem to contribute data formally for fraud detection. So if I'm giving my house on rent, whether my tenant is paying my rent on time or not, it can potentially be built into a solution. So as a landlord, I could notify a central database to say this particular tenant has not paid me his rent on time. Or that could become a surrogate data point for the banks to take a call. So there is a need for many of these consortiums and parallel data and surrogate data sets to be built. Some of that we can literally look at developed countries and replicate from there. The model's already existing, very robust, going for many, many years. We should build that. Second, I think regulators should openly promote data sharing across financial institutions or equally regulated companies. Either put the data repository at their end or allow a private organization, a tech company with proper guardrails, a company like us, to maintain the database. We maintain that in the employment space already. There's no reason why we can't do that, and we can't put proper guardrails around it.
So the employment is your initiative and your database. It's not like someone asked you to do it.
Yeah.
Okay.
So we had to do it. It's not a regulated industry there. So it could be done. This is regulated, so there's a lot of watch on what data is shared, where is it shared, and so on and so forth. But so it has to be a regulator-driven approach. And I think these are the two big things. The technology behind now tracking devices and IP addresses, etc., etc. A lot of that intelligence has been built in. But getting the surrogate data together through a consent layer, beyond just the banking data, just the financial institution data, is something I think I would very I would advocate for in a very big way.
Now, let me supplement that last question. So when you think of, let's say, what people are or how people are scheming of new things or new ways to game the system or crack it, how do you I know you said you put yourself in the place of the scamster, but I mean, how do you keep yourself abreast of this space? Because I mean, I'll tell you why I'm asking this, because it always seems like the guys who come up with some new concept, including a digital arrest, it seems to have come out of nowhere. No one seems to expect it, and it catches almost everyone completely off guard.
Yeah, so the way for us to solve is, of course, have our own solutioning team, but the bigger and the more important thing is we have a board of advisors, people coming in from the industry, very senior folks. Then we have customer advocacy groups. So we have CAGs in every major city, and depending on whether there's a banking CAG, there's a NBFC CAG, and we talk to them every quarter, and we hear them out, we understand the problems they're facing. A lot of times they are themselves not able to kind of identify a pattern. So that's why some of these problems come in only when the shit hits the roof. But there are times when patterns emerge. We brainstorm, but we realize that there is probably no easy solution. We realize it in the microfinance industry going through a little bit of its own turmoil, but partially also because of the way this whole Aadhaar enabled payment system, and that's a great system with all due respect, right? But the large expanse of population we have and the nature of customer there makes it very difficult. The poor customer is very gullible. Now you can't really solve that problem that easily. We cannot build any kind of technology layer because the guy out there who's taking that small loan is not literate enough to consume technology in a way that we are all used to. For us it's kind of par for course. So that's where the challenges are. But we continue to engage with the industries, and that's the only way. So we have some great bunch of advisors on our board. We constantly engage with our customers literally on a month-to-month basis with different groups to see what next we can pick up. So today morning, for example, it was with some of the HR leaders in the city here to understand what next for them. And so some very interesting problems that came out. So as they move up in the value curve, and they're already beginning to consume some of the solutions that we've built over time, the next set of problems emerge. Or they start envisaging that this could happen in future, and can you guys solve it digitally? Can you make it easier? And
this is in the context of recruitment
and even ongoing. So it's not just at the time of recruitment, but ongoing. So we detected that there was this employee who was clean at the time of being hired, and now later on. So patterns is the same. Whether it's a customer, it's an employee, it's your vendor, it's your distributor. It's all a bunch of people ultimately, right? So when we work with private equity funds, for example, we look at their portfolio companies. Their founders there, the key management personnel, very senior, right? So we keep how do you keep a track of that? How do you make sure that a significant financial fraud doesn't happen that could tarnish their image and the image of the country in the process? So it's So a lot of engagement.
Let me ask you like a one-line answer. So most people, I mean, having done this for 20 years, would you say most people are good guys? I mean, is it 90% who are good or 95% who are good, 5% questionable, or?
Most people are good guys. And unfortunately, it's the ones that are not, they end up pushing the regulators and a lot of us to kind of evolve and constantly, and that's the good versus evil story everywhere, isn't it? Most of us are good people.
Right. On that note, Ajay, thank you so much for joining me.
Thank you so much, Govind. Thanks for inviting.
Pleasure.